back to macros now, and India's CPI and IIP data are scheduled to be released today. Economists expect the inflation to have eased to 4.85% in March. The industrial production index is also expected to have seen strong growth in February. Ritu is joining in with the key expectations. Ritu.
Thanks for that. Let me start with the inflation data, where CPI for the month of March is expected to have eased to a 5-month low of 4.85%, according to a CNBC-TV18 poll. Now, this compares with the CPI print of 5.09% that we saw in February and 5.66% in March of last year. Now, this fall in inflation is expected broadly because of the cut in LPG prices, some easing in momentum across food and core items, and it will also be helped by the base effect to some extent. Core inflation, which is inflation excluding food and fuel, is also expected to continue to ease. That is seen at 3.27% in March, according to our poll, compared to 3.37% in February. Food and beverages inflation, that is seen at 7.83%. The deflation in fuel and light is also expected to deepen in March with the reduction of LPG prices. Remember, RBI's forecast for the fourth quarter of FY24 is at 5%, and so if inflation in March comes around this 4.85% poll figure we have, it will largely be in line with RBI's projections. On IIP, our poll suggests a growth of 5.92%, stronger than the 3.8% that we saw in January. All of the key sectors, electricity, manufacturing, mining, they are expected to record a higher growth in February compared to January. Now, we had the 8 core industries that account for more than 40% of the weight of items, including in IIP, coming in at 6.7% in February compared to 4.1% in January. And IIP is also expected to see a similar growth trajectory. So expect improvement in both of the macro data points. CPI at a 5-month low of 4.85% and IIP at a 4-month high of 5.92%.
Ritu Singh there with all the expectations from the CPI and the IIP numbers later this evening.